Hey, Alexander.
Doing great, and you, Taylor?
Excellent, excellent. Never a dull moment. Never a dull moment in my household right now. We've got a little baby crawling around, keeping me up all hours of the night. But just gives me an extra chance to hop on X, and see the latest bearish sentiment. But we bounced off 60K, and today we've got a special guest with us, Zynx BTC, as he's known on X, the sovereign individual. Zynx, how are you doing?
Hi, I'm great. Thanks for having me on. I just tried another mic. Is it all good? Can you hear the noise?
We can
No,
hear
it's
you.
not like
We can hear you well.
Perfect. Thanks for having me on.
Absolutely. So yeah, I mean, lead story today really is strategy. I guess STRC and MSTR common shareholders approved the semi-monthly dividends. There was some chatter on X. Oh, the team's really saying, vote your shares. Is this thing going to pass? But I think it was pretty much a foregone conclusion. We've got the first company in the market, a Bitcoin treasury company at that, offering semi-monthly dividends. Yeah, what do you think about that, Alexander? Of course, we've got Strive, who's going to be moving to daily dividends, but now we're going to get a twice a month event around STRC's dividends. What do you think?
it's a major event for capital markets overall. It moves the frequency closer to the Bitcoin network, and it will provide a lot of advantages for holders of STRC and digital credit product. And we all know that SATA is also going into the daily dividends very soon, and all of this is providing more innovation and showing that Bitcoin capital markets are real and they are effectively modifying the standards in the traditional finance era. And I think most importantly, I've seen a lot of critics or skeptics from the Bitcoin world in terms of how Bitcoin, treasury companies, and how digital credit contributes to the Bitcoin network. Some seem to think that those are in competition, and I tend to think that those are additive, and that Bitcoin treasury companies and digital credit role is actually to serve Bitcoin and to serve Bitcoin adoption. And the classification that Michael Saylor just provided a few days ago as well was quite interesting, with the Bitcoin maximalist, the Bitcoin technologist, the Bitcoin capitalist, and the Bitcoin fundamentalist. I think it helps people understand, even if they have, a composition of all of those factors, understand where they tend most and where other people tend most. And I think the most important part is that everybody in the network is working for Bitcoin and working to contribute to Bitcoin adoption at scale, and also willing to help the core values of Bitcoin move forward, and stay at the first core of Bitcoin's adoption and even Bitcoin institutional adoption. And big shout out to Zynx here with us today. I think over the last 6 months, even a year, we've seen a lot of different movements in the Bitcoin capital market sector, but a very few number of analysts and independent sovereign individuals on X have remained and have stick to their conviction, and have also helped others understand that conviction. And Zynx is really has been a leading voice in Bitcoin, and in my view, a very important one when it comes to independent analysis of Bitcoin treasury companies, digital credit. And it's great to have you with us today, Zings.
I appreciate that. Yeah, I just want to add quickly to the point about the move to bi-monthly dividends for STRC. Um, yeah, I think it's great. I think it's going to smooth the volatility instead of the dividend arb traders, bringing it down to $99 every month. It should half, right? And the goal of the product is to be as cash-like as possible. If you want it to sit inside something like a money market fund, it needs to have lower volatility, so it should help with that. Going on to the other point that Alexandre was talking about, you know, I've been a Bitcoin maxi for years, and it took me a while to come to the conclusion that we have to accept the world for what it is rather than for what we want it to be. And that's why I could immediately recognize the benefit of digital credit. You know, it's something supplementary, as Alexandra said, is, you know, it adds to Bitcoin. Capital that otherwise wouldn't have found itself into the Bitcoin network will now find itself into the Bitcoin network via these, you know, derivatives, via these preferred equities. I think what we've seen over the last, you know, 6 months, you know, for some reason, some people think that these companies, these products are in competition with Bitcoin itself, when these companies cannot exist without Bitcoin. Bitcoin can exist without these companies. It's not a threat. It's not a, you know, it's not a competition. And I think everyone, Alexander, Saylor, you know, all these people that are running these companies, they will say the exact same thing, that these products ultimately bring Bitcoin to a wider audience. And that's how I see it.
Yeah, really well said. It's, you know, I do wonder what the disconnect is there with some Bitcoiners. Still, you know, it's like, yeah, you don't, if you don't believe in the thesis of strategy, if you don't believe in the thesis of capital B, don't buy the equity, right? Do your own research, as we say. But to see Bitcoiners criticizing a company, especially after years of talking about, you know, the game theory of Bitcoin is for every company in the world, you know, every person in the world to eventually adopt, you know, this scarce asset, you know, to criticize Bitcoin treasury companies, just seems pretty nonsensical to me. Why Zynx do you think there is like an attack from you know, Bitcoiners who do believe in you know, the value properties of Bitcoin as money, and believe, you know, that self custody is so important, but why do you think they're so critical of specifically the Bitcoin treasury companies accumulating in this way?
So I think the first thing is you have to understand that for a lot of people, they believe in a sort of utopia where you have a section of Bitcoiners where they believe that everyone's going to self-custody their Bitcoin, everyone's going to be their own bank, and that essentially there's no reason for these companies to exist. But, you know, Bitcoin's been around for 16, 17 years, and it's clear as day that most people are not going to self-custody their Bitcoin. Most people don't care to understand what money is. Most people don't care about privacy, being sovereign. So that's one aspect of it. I think the second aspect behind it is there's a bit of cognitive dissonance going on where they think that the model isn't sustainable. You know, they will tell you how Bitcoin's going to take over the world. It's going to $1 million a coin, and then $10 million a coin, sorry. And then we'll tell you that these companies, you know, are going to go bust. These companies can't sustain their flywheel. When if you just look at the numbers, you know, for strategy, you know, they have $1.7 billion in annual obligations. The stock in 2025 did $1 trillion in trading volume, you know, so they just need to capture, with just the ATM alone, you know, 0.17% of that trading volume for the ATM to service those dividend obligations. But failing that, they've got a cash reserve, which they have just increased to $1 billion. Failing that, they have the massive stack of Bitcoin that only needs to go up, you know, between 2 to 3% annually in order to service these dividends. So if you do the maths, you know, just on the Bitcoin, forget the other two things I mentioned, the Bitcoin alone, if you believe it's going to 1 million, then 10 million, then how can the maths not work? So that's the second thing, the cognitive dissonance. And then I think the third thing, I just think it's just human nature. I think now the conversation has sort of switched from, you know, being about, you know, the Bitcoin story has moved on from the individual to the corporations. You know, Saylor is a relatively late comer to the space. He's now the most famous man in Bitcoin. Um, and I just think some people think that, you know, I call it stolen valor, that he doesn't sort of deserve that position that he's reached to, you know. But yeah, and then finally, and I've gone on for a bit, then you have those that think it's a Ponzi or they don't like the messaging behind, you know, sometimes Saylor can be a bit provocative. Maybe he might call digital credit digital money. I personally never would do that. But again, you know, Bitcoin is for everyone. You can call it what you want. It's not for us to impose our will on Bitcoin. You know, how I perceive it to be, how I use it is going to be very different to each and every individual. But yeah, I think
Yeah,
those are my points. Yeah.
yeah, that makes sense. What do you say, Alex?
Well, I think that a big criticism that I've seen is really that, and it's funny because I hadn't heard of the term gaslighting quite some time after the Knots people. And you know, I don't mean to be disrespectful there, but in the Knots debate, I was looking at all of the different points that Adam Back was making, and all of it made sense in my view. And I think that the gaslighting there, the term came back, and it seems a bit strange because you don't really understand what's the point of the other person. And what I've came to realize is that at the core of the message, and I respect very much Parker Lewis because he's been one of the key people that's allowed me to really understand why Bitcoin is so valuable at the time during COVID, and I will be forever grateful to him. And I think his main point is really that there is some kind of potential distraction from the mission of bringing the Bitcoin message to the masses and to more people. When it comes to speaking more of Bitcoin treasury companies and speaking more of digital credit, and that there would be some type of potential risk at putting too much attention on the stocks and on the securities rather than on Bitcoin itself. And I think what the point misses is that the Bitcoin message touches 3% of the population, and that's because of the how the world works as it is. And the world how it works is that literally only 3% of assets are direct commodities, and that everything else is basically a security or real estate, which is also a form of fiat asset, you know. And I think then the other point is, oh, but and that's from the on-ramp company, and I think that's in my view that's really bad because you cannot build a company's message around criticizing another Bitcoin company. I think that's really something that really needs to be corrected in my view. But in any way, I think the message is that, oh, but it's Bitcoin adoption by a company, so it's not a Bitcoin company, it's a fiat company holding Bitcoin.
Hmm.
Well, that's a bit crazy if you think about it, because then it would mean that what would that mean is any company would not be able to buy Bitcoin because it would not be a Bitcoin company. And because in my view, every company is in fact a fiat creation, because what the term fiat means is a creation by decree. And what is a company is literally something that's a contract, that's a decree between two parties that agree to form a corporation that would be legally binding in many ways. And that's literally, you know, how humans have been working for thousands and thousands of years. And if you think about it, the term fiat in and of itself is not bad. It just means human construction that's, you know, bounded by a decree, basically. And so, in that respect, when it comes to money, of course, money that can be created out of thin air is not going to be the best money. But if a corporation is, in fact, acquiring Bitcoin, that is good for Bitcoin adoption overall. And that's been my guidance in my life for now more than 6 years, is how everything that I do is going to contribute more to Bitcoin adoption. And any big decision I make is this. And one of the biggest decisions has been to launch Europe's first Bitcoin treasury company. And now there is more than 3,000 Bitcoin owned by a company in the French stock exchange. And that's quite a good start of a contribution to Bitcoin adoption. And imagine the scale of the decision of strategy and Michael Saylor, and how many people have been onboarded to Bitcoin thanks to strategy, Michael Saylor, and the whole team. Well, we know it. It's more than 100 million direct and indirect beneficiaries of strategy. And on top of that, what I think is forgotten is that strategy is actually owned by its shareholders. And what's wrong about owning shares in a company? And then comes the last point, in my view, that's the most important, is all of those criticisms only come to Bitcoin companies. And I think the time of those criticisms would be best allocated by reaching out to companies that have not yet adopted Bitcoin, rather than to criticize companies that have adopted Bitcoin. And then there is another message, which is, oh, but you shouldn't call the digital credit product credit. Well, that's literally what in practice happens within financial institutions. Those products are literally called with the term credit inside, and the credit risk is what is needed to be assessed to actually buy those types of securities. And so I think it's just the encounter between an ideal of Bitcoin adoption and the reality of Bitcoin adoption, where Bitcoin doesn't care and everybody can adopt Bitcoin. And at the same time, I think that's why I mentioned the article of Michael, which I think is quite important, is that you can bring those two worlds by reminding everybody that what matters as well is, everybody brings something to the table, between the maximalists, the capitalists, the technologists, the fundamentalists. And I think it's kind of a healthy debate as well, because a lot more fundamentalists will understand the points of the maximalists and capitalists, and a lot of maximalists and capitalists will also listen to the points of the fundamentalists. And I think more Bitcoin educational content needs to be done, but STRC and other digital credit instruments and SATA and so on, and the Bitcoin treasury companies make it so that Bitcoin is much more discussed than it would be otherwise without the existence of those products. And that's the ultimate thing that matters, in my view.
Yeah, I think these discussions in the Bitcoin community are good. The problem with like the recent shade thrown at Bitcoin companies, I think, is just like that it's flame throwing and it's not really constructive.
Yeah.
And that's kind of the problem I have.
It's always it's the Bitcoin price as well. That is what's fueling a lot. People are upset about the Bitcoin price, so they need to blame, people, because it's always like this in a bear market. It's always a lot more negative. So yeah, that's also important to keep in mind.
That is an important point. Yeah, if Bitcoin's price was ripping, we were at 150K. I don't think there'd be a lot of complaints. I think some of the talking past each other kind of comes from the point that too there is a subset of Bitcoiners that just doesn't really pay attention to equity markets that much, And if you've never had investing experience in equity markets and you're just stacking Bitcoin, awesome, that's great. I recommend going all in on Bitcoin. I wouldn't be here if I didn't believe that. Practice what you preach. But I just think there's just some people kind of bypass that step, and when a lot of people would be allocating into stocks and different equities, maybe they adopted Bitcoin and they see some of the problems with fiat. They see some of the financialization problems out there, and wrongly mischaracterize what Bitcoin treasury companies are doing as part of the fiat problem. Zynx,
Yeah.
you've talked about um, how Saylor's up 9-10x since he adopted his strategy. The company is 40xed in market cap. Um, you know, there was Bitcoin's price was bearish. The sentiment on strategy was bearish. They sold 32 Bitcoin last week, and I swear X imploded from within. Blaming Saylor for selling 0.004% of his stack. Meanwhile, he bought 48 times the amount he sold last week, just this week, which was half of the week's mining supply. Um, you know, ha, what do you make of the latest bearish sentiment or the latest bear case? Are people just pivoting constantly to find something to pin on Michael Saylor?
Yeah, before I get into that, I just want to tell you that your screen is frozen.
It's okay on my side. I think the quality will be okay for the podcast.
Okay,
Yeah.
okay. Yeah, so to answer your question, look, Saylor said this in his earnings call. He said he was going to sell some Bitcoin, and lo and behold, a couple of weeks later, he sold some Bitcoin. I don't know what the hysteria is about. Clearly, S&P, they told him one of the main concerns. He's done a lot of things to address their concerns, because not only are they one of the three major credit rating agencies, they also are responsible, for the S&P 500. They told him to get rid of the converts. The company, they want to see that the company are willing to sell Bitcoin, and he's the USD liquidity as well, and he's done, things to address all three. He's established a USD reserve. He has repurchased some of the debt, and it has made it clear that he wants to repurchase all of the remaining converts. And he sold some Bitcoin to let the market, in the words that he said, inoculate the market and let them know that that's something they're willing to do. They sell 32 Bitcoin, and of course, it's like people forget what he's, told us, or they didn't watch the earnings call. And the bears just enjoy it. That's just the truth. The Bitcoin price is going down. They blame it on Saylor. Strive, buy that 32 Bitcoin today, and then they just strategy buy another 1,550 Bitcoin and increasing their USD reserve. And it's just like, they said this was going to happen. They bought more Bitcoin. They said they're going to be net buyers, and it baffles me, but I'm not surprised. Yeah, people are it's just entertainment in the bear market, to be honest. He told us this is what he was gonna do.
Yeah, the problem is a lot of like the absolute majority and overwhelming majority of market participants, they just don't listen to the earnings call. If you look at the actual numbers, out of the 100 million direct and indirect beneficiaries, you maybe have 300,000 that have seen the earnings call on their feed on X and or YouTube, and you have probably like 10% of those that may have listened. Like, so you take maybe 30,000 people to 100,000 people maximum out of the millions and millions of beneficiaries, and I'm not even speaking of commentators. And there is so much edge into actually just taking in the information and just listening to such an incredible asymmetric information. And yeah, as you said, Zynx, we've literally never had a company that or a sector that transparent about what they do, what they're planning to do, and executing exactly this. And as you said, bear market entertainment. At the same time, I think, as you said as well, a lot of people have been hurt by the bear market, and yeah, I hope that they will be able to make it through. And because typically those types of situations in the past have been extremely rewarding for investors in Bitcoin itself. And typically Bitcoin after each bear market has done 8 to 90x upwards. That's no, of course, indication on the short term, but that's as well like the potential in terms of probabilities. So I hope we get through this, and I think I mean, shout out to Strategy for being so forward looking, and to also make their intentions clear like that in the market with the size of the company. At least on the side of Capital B, it's been extremely helpful in all of the conversations with institutions to be able to show, look, this was planned, and this is the strategy, and this is why, and so on. And I think that we are very lucky to have Strategy as a global leader in the space.
Can I just add to that as well? Like you said, you know, not everyone's watched the earnings call, which obviously makes sense. But tell me another company that is $40 to $50 billion in market cap, where you know, they're having these earnings calls, they're inviting people from the community, you know, shareholders, to talk about these things, extremely transparent. You hear from Saylor on a weekly basis. You know, so many different podcasts. You can find all the information on their website. You know, same with Capital B, crystal clear. You don't have to do a lot of guessing, you know, and that's another criticism, you know, of the space. People, you know, call it a Ponzi, or they, you know, call it a scam. But, you know, these companies are extremely transparent, more than, you know, any other company, you know, with the equivalent market cap. So, yeah, yeah, it confuses me sometimes, but here we are.
Yeah, I mean, that's one of the beauties, is that the playbook is so transparent. The real-time updates we get with Bitcoin treasury companies is just, you know, there's nothing like it out there in the marketplace. And you know, I think that's one of the attractive things for investors. And you know, that's just gonna bring, you know, more and more enthusiastic investors along for the ride. When you're able to, you know, track what a company you're investing in is doing, you know, week to week, day to day. You've got the events around the dividends. You know, it's just really exciting to watch. Of course, you mentioned the meme of Strive buying the 32 Bitcoin they announced today that Saylor sold last week. They're moving to daily dividends. You know, in just over a week here now. So, what do you think the impact of that's going to be, Zynx, for the marketplace? Obviously, smoothing the volatility, I think, is definitely on the menu. Do you think they're going to leave capital on the table through this, or is it just going to supercharge what they're able to raise?
I think it will supercharge what they're going to be able to raise. I mean, you know, a daily dividend company, I mean, what branding? You know, there's a massive community of people that are buying dividend. They're dividend investors. You've got the, you know, financial independence, retire early community, FIRE community. You've got all these sort of investors that just love dividends, love cash flows. Of course, they're not, you know, we're very early and this is a very niche space, and they remain skeptical. But as soon as you get 1 year performance history, 2 years, 3 years, 4 years, you know, you get in that daily dividend, you're having that daily news flow as well. There's going to be whole YouTube channels, communities, media around people, you know, receiving and buying and reinvesting their dividends. I think it's going to be great. I mean, if you look at also the benefit of receiving daily dividends as opposed to, you know, once every quarter, once a month. You actually increase the APY because it compounds as well. I think it's great. And eventually, I expect, to be honest, for all these, Bitcoin treasury companies to offer daily dividends, if possible. Um, so yeah, I think it's great.
Yeah, what's your read on the dailies, Alexander? Are you going to launch hourly dividends for us someday?
Yeah, I think Strive has really done an incredible job since the very beginning. They have been really impressive in their execution. Following strategy in the US is not a small task, and I think they've managed to even provide new innovations in the space, and their ability to go very fast from their initial equity raise to the launch of the digital credit to the clarity in the market towards their strategy, and in terms of the execution when it comes to providing more frequency of the dividend payments, and the ability there to have all of this executed in less than a year. It's really impressive and quite a great example of how to do it. And that's even as well helping us a lot at Capital B, because when you look at raising capital in terms of any situation, if you have a track record of benchmark players that show very strong growth and very strong adoption, that's extremely powerful for investors, because they see that it works and they see that it can be replicated. And that's really, I'm very thankful to strategy and to Strive for showing that way in terms of digital credit. And in terms of the frequency specifically, when we talk to institutional investors, that is not the number one requirement. In fact, some of them, they might even prefer, because they are used to monthly or semi-monthly strategy to just move to. But even monthly is already a great thing. What brings more frequency, most importantly, is of course more retail benefits when it comes to compounding, because if you reinvest at higher frequency, you can have even more returns over time potentially. And of course, you have to look at potential costs from financial intermediaries and so on. But in principle, that's a great advancement. And when you look at the future of capital markets, which is headed to tokenization and digital platforms running 24/7, and bringing the yield to investors with the smaller latency possible and the higher frequency possible, that's a big benefit. And there will be as well investors for all types of instruments. Semi-monthly might work great for strategy, and Strive is also smaller in size than strategy, and they can move more aggressively. Strategy, I think, is great that they also have the time to look at how this plays out, and if that's something that the market really prefers over time, and so on. And a big benefit in terms of the company overall, even the monthly, but if you go to a higher frequency, is that you increase the times at which the capital wants to stay to benefit from the dividends. And so and the payments of the cash ultimately for the investors. So I think this will over time transform standards in the market, because if you have one company, that's a start, and then you have two and three and more, and that creates a real market driven need for the big financial intermediaries, which are not necessarily wired for that at first. But it's great that Strive managed to get through this and to provide that. So I think we'll see many other very bullish things in the digital credit market in time. There will be so much adoption of digital credit that people don't expect. Today we know about Apex that like $500 million plus in STRC, and this is going to grow and this is going to be adopted by major platforms over time. You will have, when the Nasdaq is tokenized, what will be the most adopted digital credit product or the most adopted credit product in general? Well, you might have the answer already. So I think this is really a great advancement, not an absolute necessity, but at least provides different solutions for different types of investors, and it's definitely attractive for a lot of investors, even the monthly, but as well the semi-monthly and daily. More frequency, more payments, more ability for investors to get cash in their hands faster. So
Yeah.
Can I just add to that as well? I think it's also important to remember that the semi-monthlies is also one of one. So Strategy are the first company in America to do that. Strive are the first company to do daily. And yes, the institutions might not care about it now, but they follow the companies ultimately, the intermediaries, the institutions. Retail has been the first to move with Bitcoin treasury companies, digital credit. And I think what you're going to see is that the demand for these higher frequency payments start to, not now, we're still very early, but who knows in 5 years' time, 10 years' time, what, it's going to look like. And I think if there's great demand, then, the institutions themselves may prefer this type of payment. But yeah.
Yeah. Do you think there's a case, Zynx, for them to, change the dividend frequency on the other preferred equities? Obviously, they're much, they're smaller in scale and not as popular of a product as STRC, but you could see definitely as MSTR, enters the next bull market, STRK, the one that has a convertibility into common shares. You could see that one, really climbing in price. Does it make sense for them to spend resources on, increasing the dividends or staggering the dividends in any way on those products?
Well, they will. Because they confirmed to us in the earnings call that they will. But the reason why they didn't now, because they wanted to give all their attention to STRC. But they said once they have sorted out STRC, they will then revisit the frequency of the other preferred products. I don't know if they will increase it to the same frequency as STRC, but definitely I think there's room to go from every quarter to at least monthly. Which I think they probably will do. I think maybe they might have STRC as the flagship, and then the other products will pay monthly. Yeah,
Yeah.
but
Yeah,
they said they will. They definitely will.
yeah, I mean, it's just going to bring in more volume, more different trades, and arbitrageurs even will come in, which generally, when they stick around in and around your products, that just helps volumes and helps them raise more money in capital markets. Um, y- yeah, when thinking about digital credit, Alex, do you think of digital credit as a lot of us do, maybe as a product for, maybe your dad or your grandfather, someone who maybe is in retirement and wants the stability, or is there a case for digital credit to make up part of a balanced portfolio that might include Bitcoin and Bitcoin equities?
today, I think that the product fits very well people that already understand Bitcoin, but want a form of Bitcoin exposure that pays them cash flows and reduces the potential volatility. And a lot of market participants that I see are either Bitcoin maximalists actually that want a form of cash flow without having to sell their Bitcoin by lending against their Bitcoin or over portfolio positions and getting a cash flow out of that, and eventually even stack more Bitcoin. Even if you could make the case that lending against Bitcoin would be to buy Bitcoin, I know that it happens that a lot of Bitcoiners want also cash flow in cash, and then what I see as well a lot is a lot of the traditional financial institutions that want to get exposure to Bitcoin but cannot take an exposure that has a volatility of 40 to 60%. They just can't. Like, it is not possible for them. And we can circle back to the discussion we had before about Bitcoin adoption. And those institutions, they literally can't, some of them at least, and a great portion, in fact, they can't access an asset that has 40 to 60% volatility. And so the critics will say, oh, but STRC is down 5% or 6%. Yeah, but that's a risk that those institutions can tolerate and hedge against even. And having a perpetual digital credit product that has say 5% volatility and 11.5% return, that's already much better than a lot of the investable universe in terms of risk return. And if you look forward a few years, I think, yes, it might be for parents and for grandparents, assuming they have a child or a kid that understands Bitcoin and can tell them that, look, these are the risks. And I think that's somewhere that, you have to remind the risk, like the risk is this goes to zero. Because this is possible. Like you can have Bitcoin go to zero and everybody can make their own assumptions and risk. And this is the risk. And the great thing is you know the risk. And the great thing is you can make your own analysis. And when you make your own analysis, you end up concluding that there is 21 million Bitcoin. M2 money supply is going through the roof in every single market environment over the last thousands of years. And if you look even like just the last 100 years, it's 7% annual inflation on the USD, not speaking even of the other currencies. And so with a 21 million unit cap, then you can make your own judgment. But typically that would go straight up and to the right. And you know the risk, but you can assess it yourself. And so, yes, it will become a bigger part of investment portfolios. For a fact, I know that a lot of institutions that are invested in Bitcoin treasury company stocks could do 3 to 5x their investment into digital credit because of the lower volatility and the return that already matches their target for the fund. Like all the funds that I talked to, at least over in Europe, their target for the fund is literally 10 to 15% maximum, or even like 11% is great performance. And so if you get 11.5 and you get a volatility that's the low range, or even in some instances lower than the S&P 500, well, those fund managers, they can go on vacation and they know the risk. And I think over time, the biggest hurdle for those institutions is actually the size. So a lot of them, they would want to like a 100 million check. And they're like, oh, okay, but can I withdraw 100 million out of this specific credit product? And that's the question. And I think that's what people don't realize as well is anytime that SATA and STRC and the digital credit products of the other potential companies that will come into the space, every time that those go up in notional value and the amounts are raised and the volumes grow, and if you look at the volumes on a cumulated basis, they just go through the roof, and it's up and up and up. And I think something interesting that Strive has shown is being a 50x smaller company than Strategy, they can have 3x on certain dates the volume of STRC with SATA. And that's telling a lot. That's telling a lot of the demand that you can see in the market and the risk appetite of the market. And, 40% leverage, 60% leverage, and any market participant can do its own analysis. But buying Bitcoin at those levels is magnificent opportunity when you do your own analysis. And I think the digital credit product will grow and grow as the institutions can allocate more capital because the notional value is going up. And as the notional value is going up, institutions can allocate more. And there is no shortage of institutions that are interested in double-digit performance with less than 3 to 5% volatility overall. And you see, like it seemed like last week people discovered that there could be that stretch could go from 100 to 95, and they were like, oh, this is the end, and they completely forgot that this already happened a few times, and every time it goes back to par. And it's just the market valuing the over collateralization of the instrument. And the funniest thing is Bitcoiners saying that it is not going back to par, because it's like the complete contradiction, because that product is literally backed by Bitcoin. And if Bitcoin wins, that product is in and of itself with the current notional is going to be over collateralized by orders of magnitude. And yes, you can have more issuance, but this is a Bitcoin backed product, and in fact it's the most powerful Bitcoin backed product to bring Bitcoin exposure in volatility and stripped away for 97% of the investable universe. And that demand goes back to Bitcoin. And as Zynx said in the beginning, Bitcoin doesn't need it, but it just provides more Bitcoin adoption, and that's strengthening the network on an economic basis. So we have a lot of room to grow there.
Yeah, we have short-term memories, or people on X, especially the Bears. It's like you said, this has happened before to Stretch. I've maintained the position. Stretch is going to go through times when it gets tested. I think the more it seasons, the less we'll see that. But I was even surprised myself, as so bullish on strategy, to see how quickly STRC has rebounded in price and is creeping back towards par. You've got the catalyst of the semi-monthly dividends with SATA. Same thing. The daily dividends are coming. Obviously, very soon, unless Bitcoin gets another price crash, we're going to see that trade up to par again, and the ATM is going to turn back on there. Zynx, what do you think about the point that Alex made about the volumes on this? I've seen you post about it. Seeing these companies like Strive trade at such high volumes relative to their market cap. There's got to be a lot of traders out there, or investors who are using stock screeners and are seeing the volume coming into these companies, and they probably get curious, and they're probably interested in trading a stock that has such high volume and volatility like this.
So I've been tracking both of these products since inception every single day. I track their moving average over 50 days, 200 days. I track volumes. I even got a track of the volumes by hour, and it does it every 15 minutes. And what I could see very early on was you could see SATA was on a trajectory, which was basically STRC, but just a lot quicker. Partly because, well, mainly because STRC already educated the market. So when SATA came to market, offering a higher yield, people already understood the mechanics behind the product. And the volumes for both products have just been increasing. STRC is the fastest growing, preferred ever. It already does more volume than all the other preferreds combined. SATA is very quickly going to become the number 2, if it's not already, preferred equity in the world. And Alexander said about the institutions, how they need to see the liquidity is there so they can withdraw $100 million without there being any issues at all. Um, we're very early on still, but if the trajectory continues, I wouldn't be surprised where you see these products, doing multi-billions of dollars every single day. Um, and that's when you really get the sort of cash-like um, qualities of the products. Um, but yeah, you can see that the increased volume of both products is increasing exponentially, and um, yeah, very
Yeah,
very liquid.
very, very exciting stuff to see. We're coming up against our time here. Tell our viewers who may not have bumped into your stuff how much alpha they're missing by not following you on X Zynx. Where can everyone find your work?
Yeah, they just can just find me on X at Zynx BTC. Yeah, the STRC DPEG was very interesting. Every time it happens below $95, I have a trading portfolio and I'll just buy it. The last time I did that, that post got quite a lot of attention. I got a lot of bad energy, and I can't wait because I think STRC is trading at $97 now. Um, but yeah, I just think, if you can understand the balance sheet, these companies they're in very, very strong positions. If you're bullish on Bitcoin, it's hard to be bearish on these companies. But yeah, at Zynx BTC.
Great stuff, and I think we'll end it as we always do with a bullish word from Alexander.
Mm.
Yeah, I think the main problem is, actually, I think people underestimate the impact of big market players in the market that can really move the market. The big market players, some of the large exchanges, and they can apply a lot of leverage, and they can see the positions of everybody, and they can look at whoever can get liquidated and in the crypto exchanges and so on. And you can see those movements where it drops significantly, and then you see it moves back up, and then it drops again. And I think the big, because one could see that as manipulation of the market. What I see is a free market where faithful market players are rewarded every day because they get to buy Bitcoin much cheaper. And that level of conviction is the one that is rewarded at the end. And the winning individuals and the winning companies, the winning institutions will be the one that have the capacity to have that long-term time preference, even perpetual time preference. And there is, in my view, something that's really important is faith. And when you observe facts and you can come to your own conclusions, you can have faith in the future, you can have hope for the future. That is what Bitcoin provides. It is an information. You now have an information about how to actually store the value of your work in time and in space. And you actually know that this is the truth. And in the Bible, it is said that the truth will save you. And I think that this is the most important part, is that ultimately Bitcoin will win in whatever environment, because a lot of market participants are lost between what is going to be the future with the AI adoption and the geopolitical tensions and all of that. And then when you look at the money supply chart, it is going up in every market environment. If you look at the Six-Day War back in the 1960s, and that was closing one of the, not a strait, but the Canal of Suez, And what happened after that, between that and the end of the Cold War? Well, a lot of money printing, even like same levels as we are today or even more. So, and what happened between the end of the USSR and the internet bubble? More money printing. And what happened between the internet bubble and the great financial crisis? More money printing. What happened between the great financial crisis and COVID? More money printing, again and again and again. And I think that's the information that will save a lot of investors, is to focus on the facts, the reality. There are 21 million Bitcoins, and the only thing that's better than Bitcoin in the financial universe is more Bitcoin. And the most effective companies and compounding Bitcoin per share over time are Bitcoin treasury companies. And that's why we are so interested in this. It's not to replace Bitcoin, is to actually accumulate more Bitcoin and to communicate more about Bitcoin and to contribute to Bitcoin adoption all over the world. And digital credit is actually a Bitcoin-backed instrument, and we should all celebrate that as much as we also remind that it's Bitcoin-backed, Bitcoin-enabled, and serves Bitcoin, and Bitcoin is irreplaceable. So I think if you are interested in digital credit, are considering looking into digital credit, a great thing to do is to consider Bitcoin first. Why not Bitcoin first? I think that's a great question to ask for someone that comes into the space and looks at digital credit and looks at Bitcoin treasury companies. Why not Bitcoin first? Or what is the actual objective of digital credit and Bitcoin treasury companies in a portfolio? Is it to have more dollars or is it to have more Bitcoin? And if the answer is to have more Bitcoin, then, well, it's not a replacement for Bitcoin, it's actually additive to more Bitcoin. And I think with this, we are very early. We are early in Bitcoin and even more early into the Bitcoin capital markets. And at the same time, you can see a growth level that's unprecedented into a bear market. It's the first time, in my opinion, that we see so much growth in Bitcoin institutional adoption right into a bear market, not at the start of a bull market, but right into a bear market. And that shows how digital credit is transforming demand for Bitcoin. And this will completely transform the trajectory of the market. In fact, it will achieve the trajectory of the market that everybody anticipates. That's with the credit markets.
Great stuff, Alexandre. For Zynx BTC and Alexandre Laizet, I'm Tyler Rowe. Thanks for tuning in for today's Bitcoin Treasuries Roundtable. Cheers.